So, for the last couple of years, pretty much the entire conversation around AI has been about software, right? Models, agents, all that cool digital stuff. But what if I told you that 90% of that conversation is completely missing the real story? Well, today we're going to dig into the massive physical bottleneck that is about to completely redefine this entire industry. Take a look at this number, $100 trillion. This is the number that really matters now. That's the estimated gap in infrastructure, the huge chasm between our digital dreams for AI and the physical world's ability to actually make them happen. What you're looking at is one of the biggest capital shifts of our lifetime. And this quote, it just nails the core problem. For a decade, we all kind of thought that better code and more data were all we needed to keep progressing. But we're now facing a hard limit, a ceiling, that isn't about computation. It's physical. The crazy thing is, the laws of thermodynamics are suddenly becoming way more important than Moore's law. So yeah, while everyone's busy arguing about the latest large language model, the real action, the stuff that's truly shaking things up, is happening behind the scenes. It's happening in the, let's be honest, kind of boring industrial world of power grids, cooling systems, and real estate. The value is moving from the screen to the substrate. So how in the world did we get here? Let's break down exactly why the scaling laws that powered the last big tech boom are now completely failing us. And trust me, this is where the story gets really interesting. I mean, just look at this chart. AI's demand for power isn't just growing, it's a rocket ship going straight up. It's exploding exponentially. But our ability to actually generate and deliver that power, well, at best, it's growing in a straight, slow, linear fashion. And that gap, that's the whole story right there. It's an equation that just doesn't work, and it's forcing a complete rethink of the entire industry. You know, this slide really sums up the whole paradigm shift. We're moving out of what you could call the era of bits, where you could scale a software company to 1 billion users with barely any physical cost. We are now, without a doubt, in the era of atoms, where every single bit of digital progress is paid for with massive, and I mean massive, amounts of energy and physical infrastructure. Okay, to make this real for you, think about this. 10 times. A single complex question you ask an advanced AI model can use up to 10 times the electricity of a simple Google search. Now, multiply that by billions of queries every single day. You can see just how fast the energy math completely breaks down. Our power grid was never, ever built for this kind of insane, nonstop demand. And look, this isn't as simple as just saying, let's build more power plants. The problem runs way deeper. It's structural. These data centers need huge, stable, 24/7 power, and that's something our old, creaky grids really struggle to deliver. This is exactly why you're seeing data center projects getting halted in places like Virginia and Dublin. There's just not enough juice to go around, period. So all this physical crisis, it's more than just an engineering headache. It's forcing a major epiphany about what AI even is. We've got to stop thinking about it as just software and start thinking about it as something, well, something much more fundamental. Here it is. This is the new world we're in. Compute is now an industrial commodity. You know, just like oil or gold or copper. Its value is now set by physical supply and demand, by its extraction costs, which in this case is energy, and by all the logistical challenges. The companies that control the physical means of producing compute are going to have immense power. So this is the new math. This is the real money math that all the smart investors are looking at right now. Your edge in AI isn't just about having the slickest algorithm anymore. It's all about how efficiently you can turn 1 watt of electricity into a useful unit of computation. The lower your energy cost, the higher your potential value. It's really that simple. And that leads us to this really interesting new idea, compute alpha. That's the edge, the financial advantage you get from having cheaper or more reliable power than everybody else. Think about it. In a world where energy is scarce, a software company's biggest competitive advantage might not be its code, but its power purchase agreement. But wait, because power? That's only half the story. All of that energy creates an absolutely incredible amount of heat. So we're slamming into another wall, and this one's all about thermal limits. The chips in these AI servers are packed so densely that traditional air cooling, literally just blowing air on them, doesn't work anymore. We're talking about chips literally getting hot enough to melt themselves. Okay, so given these massive physical roadblocks, you've got to ask, where's the smart money flowing? Because if the problem is all about atoms, not bits, then the investment opportunities have to be in the world of atoms too. And the logic here is, well, it's just beautifully simple. You can't code your way out of a physics problem. You have to solve it with better engineering. So the real value, is moving to the people who are actually building the stuff that solves these physical problems. And that brings us to three really specific areas. First up, you've got next-generation cooling, things like liquid cooling and specialized fluids that can pull way more heat away than just air. Second, and this one's wild, small modular reactors, or SMRs. We're talking about data centers planning to build their own dedicated nuclear power plants right on site, just to get off the unreliable public grid. And finally, number three, edge infrastructure, which flips the whole model around by moving smaller data centers closer to where the power is generated, instead of closer to us. So this is the question you have to start asking. Next time you look at an AI company, don't just ask about their model. Ask this: do they own a solution to a physical constraint? Are they making the coolant? Are they building the reactor? Do they own the specialized real estate? Because if they don't, they're basically just renting space in someone else's world. Okay, let's pull all of this together. Let's wrap up what this new era of atoms really, truly means for all of us. So what are the big takeaways here? There are three things you absolutely need to remember. 1. AI is an industrial revolution demanding energy and materials like we haven't seen in a long, long time. 2. Physics, not software code, is now the ultimate ceiling for growth. And 3. The biggest opportunities, the most outsized returns, probably aren't in the AI models themselves, but in the picks and shovels, the nuts and bolts physical infrastructure that makes the whole thing run. And so I'll leave you with one final question to think about. As you're trying to figure all of this out, the biggest question you can ask yourself is this: is your strategy built on the promise of infinite digital growth, or is it grounded in the hard, unforgiving physics of reality? Because at the end of the day, physics always wins.